So it's tax season and you might have just filed your return and found out that you owe taxes. Are you in big trouble? Is this something that you need to fix? We're going to break down everything that you need to know if you owed taxes this year when you filed your return. You don't want to miss it. Welcome back, guys. Again, my name is John Boyd. I'm a certified financial planner and I'm the founder and lead wealth advisor at Modern Wealth. If you like today's content, be sure to like, subscribe, and share it with a friend. And of course, if you need help with your own finances, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. We'd love to help you out. So before we address the elephant in the room, and that's the taxes that you owe, here's what you need to do in the short term. First and foremost, you want to check the return itself. If it's still in draft mode, meaning that, it's pretty much ready to go, but it hasn't been filed, go ahead, take a look at the return and see if it was filed correctly. If you did it yourself or utilizing a tax preparer, you still want to double check if the return was filed correctly, because the reality is returns get filed incorrectly all the time. People are human. They make mistakes. It's pretty common to see mistakes. One of the most common mistakes that I see people make on their returns is they inadvertently report something like a backdoor Roth conversion as taxable. It drives their taxable income up and they end up with a surprise tax bill and they're thrown off as to why they owe taxes. So again, that's just one example, but there could be tons of different examples as to why your return got messed up. So make sure that it's actually filed correct before you do anything. So if you've already done that, if the return is indeed correct and you're thrown off about the fact that you owe taxes, here's what I don't want you to do. One of the most common tactics or strategies that I hear people think about deploying is filing an extension on the return to kick the can down the road. They don't want to pay the taxes now. And maybe they knew that they were going to owe taxes, right? I mean, I see this a lot with small business owners, people intentionally under withholding on their paychecks at work. They know they're in for a tax bill. And so their thought is, I'm just going to file an extension. I'm going to kick that can down the road. So maybe that's you finding out that you owe taxes. Is this a good idea? The answer to that is no. It is generally not a good idea to file an extension just simply to avoid taxes, because the reality is it doesn't avoid taxes for you. The IRS expects you to pay taxes that you owe them at that April tax deadline, right? So just because you file an extension doesn't extend the tax payment due date. You owe that in April. So if you're one of these people that decides to file an extension to avoid paying taxes, in air quotes, right? Avoid paying it. What ends up happening is that the IRS will generally assess a failure to pay penalty. That's a 0.5% penalty per month up to 25%. In addition to that, they're going to assess interest on that balance that is owed. Right now, that interest is at around 8%. So when you add it all up, the penalties and interest owed for not paying your taxes on time can be quite hefty. So if this is you, or if you're someone who actually has to file an extension, right? It's completely justified. You're maybe a business owner and you haven't finalized your profit loss statement, right? All that good stuff. And you actually have to file an extension. If that is you at the very minimum want to at least pay that tax bill at the tax filing deadline in April so that you avoid any penalties and interest. So the second big issue that people want to know here is you're probably thinking, all right, JB, I'll go ahead and pay the tax. I don't want to deal with it. I don't want to deal with penalties and interest. I'll go ahead and pay it. But am I in trouble? The fact that I owed taxes in the first place, is it a bad thing that I owed taxes? And the answer to that is maybe. So if you ended up owing taxes when you filed, if you ended up owing a tax bill, the first thing that you need to check is to see if you paid any under withholding penalties. If you're not familiar with under withholding penalties and tax underpayment, we did an entire episode on this topic, and I'll be sure to link it in the description of this one. So check that out if you are not familiar with this concept. But in a nutshell, the IRS expects you to pay your projected tax in a timely manner throughout the year. And there's two key ways, or two main ways, I should say, that you can calculate that. Number one is to pay in estimated taxes or withholding 90% of your current year tax bill. The second way you can calculate it is you pay 100% or 110%, depending on how much you make, of last year's tax liability. You can pick either one, whichever one is less. So just to keep it simple here, if we went with 90% of your current year tax liability, that's how much you need to be withholding through your job at work, quarterly tax payments, a combination of both, in order to ensure that you don't face any under withholding penalties. Now, if you end up owing a tax bill and you didn't have any under withholding penalties and can easily pay the tax bill, in my opinion, that's the best scenario, because in that case, that means that you kept that cash and made money on it, and you didn't overpay the IRS throughout the year. Yes, you paid them. Yes, you followed the rules, but you didn't overpay them, right? We don't want to overpay the IRS. We want to play by the rules. We want to be compliant, but we also don't want to overpay them if we don't need to. So again, if you owed taxes, it might not actually be a bad thing in this particular scenario. Now, on the flip side of that, if you find out that you actually did in fact owe under withholding penalties on that tax return, and this is news to you and you're shocked and you're like, wow, what do I need to do to get this fixed? The biggest thing that you need to do is figure out your tax withholding situation for this year. Because the reality is, and we'll talk about it in a moment, it's very hard retroactively to correct prior year tax years issues in the following year. So what you need to do now is focus on avoiding the issue for this year. So that might mean adjusting your payroll withholding at work, right? Making sure that your job withholds a little bit more on your paychecks, every paycheck that you get. It might mean setting up a quarterly tax payment plan. It might mean doing more proactive tax planning throughout the year. But bottom line is, you'll want to address that situation this year. And it's generally done through change your withholding and making sure that you're paying more throughout the year so that you don't get hit with under withholding penalties. So the final big question, this might be the most important question to a lot of you, and that is, well, what can I do to not pay as much taxes? You know, that just the fact that I have to pay all these taxes is annoying. I don't want to have to pay it. What can I do to avoid paying all that tax? And again, as I mentioned earlier, the reality is that there's very likely not a whole lot that you can do to retroactively fix your prior year tax issues. So let's say, again, it's 2024 and you owed a big tax bill in 2023. Unless you did a lot of proactive tax planning in 2023 to address that tax bill, it's difficult to go back in time and do it. Again, depending on your situation, there could be levers that we could pull to fix those issues, but it's not extremely common. The reality is that you probably should be doing more proactive tax planning on an annual basis. You need to be checking what your tax situation is, what type of moves you need to be making, what updates to the tax code can you be taking advantage of. If you're someone who has a tax preparer, right, you pay someone to file your taxes and you're thinking to yourself, well, isn't that their job to do that for me? The answer is probably not, right? Tax preparer's job description is to file your taxes based off the information you give them in a compliant manner. 99% of the time, they are not going to be doing proactive tax planning throughout the year for you. It's not in their job description. You're not paying them for that. You're simply just paying them to file your tax return. So again, the burden is upon you to do that proactive tax planning so that you can reduce that tax bill at the end of the year and aren't blindsided. And it's something that's much more manageable and that you're happy with. If you need help doing proactive tax planning, right? If this is something that's a little bit too much for you, reach out to us at www.modernwealth.com. That's our bread and butter. We do it all here. It's something that we take a ton of pride in. We'd love to help you out with it. Again, if you like today's content, be sure to like and subscribe so that you keep getting content just like this. It's been a ton of fun, guys, and I'll see you next time.